The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, traders and traderettes, to another excellent edition of the Power Trading Hour. We were sadly interrupted yesterday by a power outage. They just had to continue screwing with that transformer down the street all day long. I finally got everything working about 8 o'clock last night. I'm back in power, and I guess we probably could have done 10 minutes on the power backup, but they just kind of diddle-dallied all day yesterday, so I'm glad to be back with you in the Powerless Trading Hour. Yes, that's what it was yesterday, the super powerless trading hour. Today, finally getting caught up with a lot of the stuff. Of course, we've got the big webinar tonight, and you can always go and sign up for that. Going to be talking about lots of stocks, and I've sent all the stuff I want to talk about to Tom, and we'll probably be talking about that before he does his show. We'll be looking at it, but a lot of stocks giving some fairly decent signals, so we'll be watching that, and we'll be discussing it, kind of batting the ball around a bit. We're going to be looking at stocks with confluence. We're going to be looking at stocks testing previous highs and lows, and I think it'll be interesting. Of course, today we had kind of another one of those moments that's kind of tough to figure out. Pushed up to 1882 on the S&P cash. Volume was just horrifically low in the morning, and it is continuing to be one of those kind of things. We are just now turning 2 billion shares on the New York Stock Exchange consolidated tape. Anybody knows that anything less than about 2.2 billion to 2.4 billion is pretty much a slow day when we start the show, and we're going to have that yet today. Right now, 1872 on the S&P cash, off about 5 points, and we'll be looking at a lot of the stuff going on here today. In history, in 1991, Microsoft confirmed that it's the subject of an investigation by the Federal Trade Commission. Over the coming years, evidence of Microsoft's monopolistic behavior mounts until the U.S. District Judge Thomas Penfield Jackson issues a final ruling on April 3rd, 2000, finding Microsoft has violated federal antitrust law. That day, Microsoft stock plunges 14.5%, shedding $80 billion in market value in one day. Now, most people don't know kind of the background of this whole thing, but this is a lot of people fault companies for getting involved in politics. And about this time, or actually 1992, we were going to have a new president, and a lot of Chicagoans that are used to pushing the corruption angle. In 1991, I suspect, but I can't prove, that this probably got started as an extortion plot for Microsoft. A lot of politicians didn't like, especially old-time crooked kind of politicians, didn't like the fact that these tech stocks, they weren't participating. They weren't throwing their fair share of money around in the political arena. And Bill Gates more than once had politicians telling him that if they just give him a little bit of money, this would all go away. He pretty much didn't want anything to do with politics at the time, and pretty much led to this finding on April 3rd, 2000. And now it is a common thing for tech companies to be involved politically, just to keep these politicians off their back. And as far as I know, all politicians have done it, not just a single party. So I'm not going to point the finger at anyone in particular, but all of them, and paint them all with the same broad brush. But when we look at very active companies in politics today, like Apple and Google, and some of the other ones right now, Facebook really pushing what they call immigration reform. What I call was try to cut the pay of programmers down in Silicon Valley, which that whole thing is going to be a huge boondoggle when it finally hits the lawsuits. But they've been doing it for more than a while. Of course, hypocrisy knows no end, whether or not it's in Silicon Valley or on Wall Street. But kind of interesting to see. Most people don't think back that far, and we always like to start the show with just a little bit of history to get going. So what am I looking for in the S&P? It's all about a close below 1865, and we'll be watching the close here. We've gotten about 20 sell signals up here at these highs, and the question is just what it's going to take to either break this market either higher or lower. My guess is that we are stuck in this little trading range, and until we close below 1865, there's going to be hope out there. It's hope, and get back to political speak, but there is still the hope that this market is going higher. I see all the high flyer, big, expensive stocks being the weakest at the moment, and not uncommon to see stocks like Plug and all the other stocks come off the lows at the very end of a huge major run in the marketplace. I've seen this picture show before, and it always ends the same. But it is interesting. Now, one of the things that I did want to bring up, because someone did this fact over the weekend, and I was going to bring it up yesterday, but 3/4 of all IPOs over the last year have never made a dime and still haven't made a dime in the first year. This is the most since May of 2000. And this isn't just tech. This is everything. This is all the biotechs, all the other stocks. We've chronicled some perennial losers like Angie's List that have been in business for 15 years and still have never found a way to make a profit. That thing's languishing down, in the low teens. And not going to really change. I think a stock must have the ability to show that they can make a profit, or in the case of a biotech, have a giant warning label on it, kind of like on the side of a pack of cigarettes. Warning: this stock may be harmful to your health, as it's going to be 5 years before we know anything, and you're going to put your money up now, probably at a higher rate than you could buy it back later. And just when people say that this isn't a bubble, there are a lot of metrics out there, I think, that you can say are a bubble. We've had Fleckenstein come out over the weekend. He's getting ready to start a major short ETF, not ETF, major short fund. He's been kind of sitting on the sidelines for a while, but just know it. During the lunch hour, Joseph A. Bank and Men's Warehouse finally said, "You'll like the way you look in our new single company, since we won't have to compete against each other anymore." And they are finally going to be able to buy the company for $65 per share in cash. But it was closed. Didn't see it. Talk of the Den yesterday. It's more consumers. Huh? Oil seal under 100. Okay. Just looking in the Den here for a second. And do we have it? I'm looking up here. Where's the contract? Oh, there it is. $100.10 for crude right now. When we look to the Eurozone, mostly flattish. what I always look for first, of course, is Germany, since they own 80% of all of Europe. Production and facilities that actually make any money whatsoever. Kind of funny that within a short 25 years after the end of the war, they already had a GDP that dwarfed all the countries around them. So even though they lost the Second World War, just a little bit of hard work, they came back. But nothing really exciting over there in the Eurozone. Now, if I could just find out where my mouse is. Probably the most interesting thing to me is the way Japan's been moving. The Nikkei gained 0.7, but remained near late January levels. Heavyweight SoftBank provided support. It was up 2.6%, but other than that, not a lot to honk your horn about. In Hong Kong, the Hang Seng finished just above its flat line. Energy and real estate shares were a drag. And CNOOC was down 2.7%. China Resources Land giving up 2.4%. And probably the most interesting thing was the Shanghai that was basically flat, narrow, avoiding a close near 7-month lows. Again, property shares, a little bounce out of a fairly negative look. The whole issue with China now is that they have cut the money spigot off. They had almost $160 billion in new loans in January, and that is probably around $20 billion for the last 30 days, suggesting the clampdown of the $8 trillion loan business in China is coming to an end. The Japanese economy is losing steam also, and they are bracing for a rise in what they call the consumption tax, or a value-added tax that's going to go from 5 to 8% in the coming months, or month actually. I think it comes on in 2 weeks if I remember right. Of course, copper just continues to get slammed out here. This is a intraday chart once again, and I haven't looked at it since just a little afternoon, but got down to almost $2.94, up at $2.96 when I last looked, or just over it. But this is kind of a familiar pattern. We showed this on Friday, and I think it is still the pattern to be watching out here, and that is it is a mad market, and they don't like copper clappers at all, anything copper. And, of course, this move out here went back and blew through the July or June-July lows in the copper lows. We'll be back in just a minute. You can always give me a call, 877-927-6648. You can email me at path@tfnn.com, and you can, of course, get on the show or put a note in the den.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
As we come back, Bill Ackman is got a little presentation going on against Herbalife once again. Of course, a lot of people are going up against him. I guess he's still got $1 billion in that short. And the question is, could he be right and still be wrong on the trade? And the answer is always yes. And, of course, he's got some new documents out showing that what everybody already knows, and that is 85% of the people that get involved in a multi-level marketing scheme will lose money. And that very few of them actually worry about selling products. All they do is sign up more people, and that's the element of a pyramid scheme. Now, the way they do it, pretty much not against the law. The question is, when you get to the point of saturation and the company can't grow anymore, what do you really have? Just new suckers to get in at the bottom of the pyramid, and that can go on for a long time. The question is if it really makes a great deal of sense in this internet world to have a system that it is it's just weird. But he says he has some new documents from inside the company that show that no one really cares about how much product they sell outside of new people coming in to their multi-level marketing. And products can be good, but really, what's the chance that they got a better product than everybody else? Yeah, probably pretty low. Anyway, looking at a lot of stocks that have been moving out here today, and I'm going to try to actually move all the stuff around on my multiple screens out here to take a look. Maybe I actually do have a update May copper closed at 295. So that probably gives you everything you need to know about that. And there's some other stocks moving out here. IRE, I've been watching this kind of closely. It looks very interesting. Of course, this is the first country that really went to austerity to get everything going, and actually been doing fairly good. I've been watching this. It's a little bounce out of here, but of course not a lot of stocks moving today. But we've got it coming right back to the support level, and it did so on just minorly lower volume. Did gap down on fairly decent volume on the 4th, but I don't know if there's a whole lot you can hang your hat on that one. What else do we have? General Motors is off a couple percent. I suspect this is making its ABC down. I talked about last fall as the government was getting out of this position. They made it very easy for General Motors to give subprime loans. Once again, the same thing that caused the problem to begin with. And you can probably make a fairly decent case out here that this is set up for an ABC down. That ABC down would take you to $30.65, and there's a beautiful gap right at that exact same level, and I suspect that's where this company is probably going. They basically blame a lot on weakness in Europe and China. I suspect when the dust finally clears, and if you could get through the maze of accounting in a multinational like General Motors, you'd find out that probably a lot of that weakness is no more farther than right here. But I look for this thing probably over the next 60, 90 days to be in that $30 window and find that gap down there. It'll probably have fairly decent support at that level. But that gap goes back to the May 2nd of 2013, and probably going to get tested, I suspect. Other stocks of interest moving out here today, JCPenney. Of course, this thing is ludicrously short, and everybody comes out and pushes it one more time, thinking they've got something actually here. And what can you say? This thing has pretty much done a fairly decent retrace back up off the highs. Let's take a look at that real quick. And it's going to be pretty hard to go much higher than this. This is, it got through that $8 level that is Confluence, but my guess is that they're not going to be going much farther than this. Anyway, we'll be back in a minute. Email me at path@tfnn.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, going to look at Vail. And let's see, Ken emailed me. And, of course, anytime someone emails me, we have
You've got mail.
Do that, or maybe that.
You've got mail, baby, yeah.
Or maybe this.
I got mail, yay! I got mail, yay!
Well, thanks, Ken. We're looking at Vail, and it is interesting. But certainly, this thing came down on heavy volume. You had 37 million shares 2 days ago, yesterday. 30 million shares. Today is a little lighter, 21 million shares. But this thing needs to go down there and break at $12.39. And as an iron ore company, I have a feeling we're probably going to see $10 on this stock. We'd need a huge change in the volume and a huge change in what's happening in China. Now, one of the reasons we saw continued moves on copper today is that China is letting several new companies go bankrupt. One of them is a solar cell company. And I think with them letting that company go, they are also intimating that they're going to let some of these other sovereign wealth, I don't know if they're sovereign, they're just wealth contracts, I guess kind of like an ETF without an exchange, where a lot of the Chinese have been pushing their money. But this thing is close enough with high enough volume into these same lows that makes me think we could see significantly lower prices and maybe down to the $10 level on Avail. Other stocks of interest to me, Urban Outfitters down. Looks like they're certainly going to get back down into this gap in the 33.5 range. Came out with earnings and guided down. Of course, a volume picking up out here. 3.5 million shares on the last major low on February 4th. And, of course, you've already got 5.8 million shares for today. So I don't see a lot out here that's going to hold any of these stocks up if they've been weak already. Let's see. So let me do that real quick. Urban, McDonald's. I know Andy hasn't liked a lot of these companies that rely heavily on beef or wheat or corn, especially these fast food stocks, and why we've got McDonald's up fairly strongly today on 12.5 million shares. This is still just going back in to the 20 million share high from November 25th and backing off a little bit on that. But I have a feeling a lot of this has to do with going to safe havens. A lot of people look at McDonald's as the safe haven. Got a caller, and that's John from Philly. How you doing today, John?
David, thanks for taking the call, sir. David, I wanted to ask you about GTAT. To give you the background there, back in the fall, it was like November, they did a secondary offering to raise capital to do some capital equipment investing, and the stock fell down, and I was fortunate to grab a position trade at 875 or thereabouts. I took the meat out of the move and got out at 15 and a quarter.
Mm-hmm.
And I've been standing aside since. It's gone higher since. I see it's made a slight double top, one could see, and the volume at these double highs here near 18, the volume is clearly significantly lighter than the surging volume on the meat of the move, meat of the rally up. So with that all background, I'm wondering if you can set some parameters that you might be looking for where if it declined, where a decline would interest you in taking a look at the long.
Well, here's the whole proposition of GT Advanced Technologies, because I've written about this company in the Tech Insider.
Oh, great. I missed it. I apologize.
I also missed the stock, too. I didn't think it was going to do a whole lot, and here's the background. Apple's going to be making new screens, and instead of using Gorilla Glass, they're going to sapphire crystal. Like my nice Rolex watch that I got when I finally hit it big in the late 90s, and everybody had to have one, including me. It had a sapphire crystal on it that's about 10 times more scratch resistance than Gorilla Glass, but very, very expensive to make. I think a crystal for just a Rolex watch is about $300. Anyway, the sapphire is just an excellent way if you need to have something that is very highly scratch resistant, won't break on you. And this company makes ovens that make sapphire discs, and they call them ingots in the industry. I wrote about this one mostly as a adjunct to what it was going to be in for Corning in their Gorilla Glass business. Now, Apple bought a bunch of machines, enough to build hundreds of millions of new iPhones with sapphire crystals in them. My guess is this is a response to Samsung going to the whole graphene impregnated screen business. And so we've got Samsung and all those companies going the way of higher technology, and Apple doing the tried and true sapphire crystal. And anyway, as far as I know, all this movement, everything up here was Apple buying a new sapphire plant in Arizona, and then buying enough machines to add a couple million or 100 million screen each year, and it looks like they're going to even try to do that up to the size of some of the smaller tablets. So it's all about glass. And the question is anybody else going to put that kind of money back into this and use a sapphire, or are they going to use what Asia kicks out? Now, the advantage of using sapphire is that it will be able to read fingerprints through the glass without just having currents. Apple's phone can only read fingerprints through the home button, where there's a very small piece of sapphire. So the whole background on this is all about sapphire. These guys make the ovens and the technology to make sapphire crystals, and they bought a ton of it. Now, is this going to be back at $8 next summer? My guess is yes. They're going to have sold all the ovens. Maybe someone else buys a few, but once you buy their equipment, it's not like you're going to have 400 other people buying the same equipment.
Gotcha.
You got Apple basically buying all of that, buying the old plant in Arizona that used to do sapphire ingots, and they're just going to be making screens for Apple. At least that's what
I appreciate that
Apple
point of
said.
view. Yes, David, I appreciate that point of view. I might ask you if we can change subjects real briefly. Amazon. Amazon's currently 368. Of course, it's bounced on light volume into that huge high-volume decline that occurred in reaction to the fourth quarter earnings report.
Yep.
Of note to me, however, was before the bounce occurred, I was listening to a show of yours and looking at your art of the charts, and noticed just real vividly a breakaway gap that occurred back last fall. Once again, another earnings release, but this time a bullish reaction. There was a gap at 337, and that's precisely, just precisely, where the decline off of 410 stopped. My question to you is, now that Amazon stock has proven the importance, proven that gap support as being relevant, at least once, is Amazon a buy against that mark, in your opinion?
Not yet. I would buy it if you had 6 or 7 million shares. It had 12 million shares on that gap up. It went and tested it on February 5th with 10 million shares. I'm not willing to say that 10 million is enough of a test to go buy it. I wouldn't say short it on that. I would say short it on the last few days where this thing gapped down on 16.2 million shares on the 31st, and it came up, and the best it could do was basically 3.8 million shares. Now it's kind of starting to roll over. So to me, this thing is an ABC down, and you got pretty good support at that 337 level. So it may take a while to break through that, but let's see if I've got 408 would be it, right? Actually, an ABC down would take this to 305.
Yes.
So, for me out here, I don't know. I think that there are easier shorts. That would be my only say. But all these big stocks, I'm short pretty much all of them now.
Yes, right,
all these huge $400 stocks. I've gotten pretty good starts in them. And the stocks that I like that were less expensive don't seem to have been as weak. So we'll watch out here in the next few days. But I have a feeling this thing rolls over just like the rest of these super expensive stocks.
Yes, I've seen that, having, of course, being a subscriber to your newsletter. One parting question I wanted to just put to you: the big four market cap U.S. home builders, Toll, Lennar, D.H. Horton, and Pulte. They've all come off meaningfully off the highs that they sat in the past 3-4 weeks.
Yep.
My question to you is, do you have any reason to believe in your work whether these declines are coming off of something that's just a short-term top or more likely a longer-term, bigger top? Do you have any view on that question?
Just from what I see around this area, I suspect that we've got probably a top here for the next couple of years, and we're going to see interest rates go slightly higher. I know that is a rare view around TFNN's host camp, but I think we are going to have higher interest rates.
Gotcha.
And so am I going to short this sector? No, but I certainly wouldn't be along it right now. I don't think that there's anything. If there was a lot more meat on the bone on these, but I think people just keep buying these things out of almost Pavlovian response. But there's a lot weaker stocks out here, and that's the only thing I'd say. And maybe I think over time, maybe the next 60, 90 days, you could see this back at the $30 level, maybe testing the lower end of this thing, which is not bad. It's a 25% move off of 40 to 30. So, but I think it's a harder case to make, and you're going to find some pretty good support at about $34.
Very good. David, thanks so much for all that input. I do appreciate it.
You bet. And I got a question here. Okay. And I've got somebody saying, look at FNMA. Let's take a look. Fannie Mae. Very interesting. Of course, basic stock out here that is owned by or pushed by the government. I don't know, maybe that's what they're talking about out here. Let's see if there's any headlines. Headlines. Certainly off strong. Senate banking here. Leaders sketch out Fannie Freddie bill. Wait for Freddie Mac's RMB bid list. Unwind Fannie and Freddie. Senate bill. That's all Tuesday. So I guess it must be all that stuff. D.C. walks a fine line in housing reform. Senate banking reach deal on Fannie Freddie bill outcome. So, yeah. But, I mean, certainly you were getting back into the previous high out here at $5.44 that had 270 million shares. What did you have, 30 million shares yesterday? So, it probably tells you everything you need to know. Yeah. Flushed. They certainly are. Anyway, I wanted to take a look and see if there was anything else going on out here. Oh, I was going to say probably the only news coming out here late in the day was in tangential to Herbalife. And the thing's down a little bit. But what has happened is New Skin was one of these companies that buried a lot of stuff in phony, I guess what people think are phony accounting in China. The same people that were hired to investigate New Skin have been hired to investigate the dealings of Herbalife in China. I wonder what they're going to turn up when they flip a few rocks over. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
We got a lot of stocks with blow-off tops. Friday had a big conversation with one of our callers about all these battery surrounding companies and fuel cell companies. And like I said, it was they say in the industry, the technology of the future and always will be. We've got some new reports out that pretty much put Plug Power on a giant. I tell you what, this is probably one of the biggest bearish engulfing candles I've ever seen, but pretty massive out here. But I think we're starting to see just a little bit of reality come back into the market. One of the analysts from Citron Research today pointed out that Plug Power has said they were going to make money more than 3 times. Each time pretty much gone back to almost nothing. Like I said, one of these stocks that kind of like a heartbeat. Every once in a while they put the paddles to it and get it going again. But you had a nice bounce out there on Monday, but pretty much destined for these stocks that are nothing more than vehicles for gambling. Apple is up a little bit today, interestingly enough, on probably one of the most dubious calls from an analyst that I've read in a while, basically saying that the iPhone 6 is going to make them so much more money. And there's nothing new on all this. They're making a iPhone 6. It's going to have a slightly bigger screen, and especially women really like that because they don't care about putting in the phone in their wallets. They're more interested in putting it in their purses where they have plenty of room, and not so much concerned with it all. Making a little doji out here in a gap, and volume not all that exciting. With a little bit of time left in the show, I think I've got a little time left in the show. Yeah, a couple of minutes. I want to update the market and see what we're doing for volume out here. But it is, we're right at that 1868, and anything below would be a huge issue. And it is right at that level. So we're going to watch the end of the show tonight. Of course, the end of the close tonight. Just remember that we are doing a webinar tonight. Tom O'Brien and I are. We're going to be going through all the charts that look like light volume testing at top. So if you're looking for more ideas or what you're looking for, I've gotten a bunch of stocks together. Tom's and I are gonna go through them, and the criteria is going to be looking at confluence levels, so we can see where, if we have a top, where the first sign of supports are going to be, and maybe how to pick a stock that has tested the top on extremely light volume. I've got probably 10 or 15 stocks that we're going to go through tonight on that. So make sure and be ready for that at 6:30. You still have time to go sign up. Go to the front page of TFNN.com and check that out. Again, 1868. If we can get 1865 or lower for the close out there, I think we've got a pretty good indication of a top being in, and 2.4 billion shares on the consolidated tape does not scare me at all when we look at a high out here. And I'm going to give you one. I think I got enough time, don't I? Nope, I don't. I'm watching Andy. He's got those barrels tied to him. He's taking 3 barrels down. Jaws when it comes to commodities. And I talked to him a little bit. I am him here about the cost of production in copper. Not much lower. Well, I'll be looking to see what he thinks about it. Be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.